Hi there, you're watching Market Cafe on ET now with me, Shreyanshi Singh, and over the next 1 hour, I and Cheryl D'Souza will be taking you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, we've got to take a look at what the Wall Street really did. And after seesawing for most of the afternoon, the kind of move that you saw was that stocks ultimately closed lower. So when you take a look at both the S&P 500 as well as the 30 stock Dow, you saw an initial rally coming in there, rally to record highs after the Fed announced its rate cut decision, and after that you saw a little bit of a downtick coming in when it comes to both of these indices. Firstly, let's take a look at what the US Central Bank did, and of course we'll be delving into more detail into this, but the US Central Bank slashed its overnight lending rate to a range of 4.75 to 5% from 5.25 to 5.5%, which came as a surprise for some investors who also criticized the size of its initial cuts, but also something that was largely being penciled in for most investors. And this is the first rate cut reduction delivered from the Fed in 4 years as well, and that's the kind of handover that we have. Firstly, let's take a look at Dow. Closed lower by about 100 points, and that's the kind of move that we saw coming in for Dow as well. And the street, of course, was assessing Fed's supersized cut, and that is something that we saw playing out in the US markets. Largely, that's the kind of handover that we're looking at this morning. Let's also take a very quick look at Europe markets, and European markets closed slightly lower as investors also considered key data from the region, and this was of course when they were awaiting the US federal interest rate decision as well. Largely, that's the kind of handover that we're looking at when it comes to Wall Street. But let's take a quick look at crude as well then. And when you take a look at crude, what you're largely seeing is a slightly lower close coming in for crude as well. Oil prices closed slightly lower. So when you take a look at WTI or Brent, that's the kind of move that you're looking at. So when you take a look at WTI, downtick of about 28 cents or 0.4% coming in for WTI. So $70 per barrel is where WTI was at. And when you take a look at Brent as well, downtick of about just 5 cents coming in for Brent. $73 a barrel is where Brent was also at, so that largely is the kind of move that we're seeing. Now, on a year-to-date basis, you're seeing a decline come in for both of these contracts. So WTI on a year-to-date basis, downtick of about 1%, and Brent as well, downtick of about 4% on a year-to-date basis, and that's largely the kind of handover that we have. Of course, the oil market has been rattled this month by worries about a growing imbalance between supply and demand, and that's something that has kept the market on its toes. Largely, and US crude and global benchmark Brent of course fallen about 13% in the third quarter, and that largely is the kind of move that we saw. In terms of what else the market is keeping an eye on, of course there's geopolitical tensions that are escalating in the Middle East, and this is as fears grow about a major conflict between Israel and Iran-backed Hezbollah as well. And that is something that is likely to keep the market on its toes as well. Lastly, let's take a very quick look at gold as well, because gold eased after hitting that record high after that US Fed rate cut as well. So when you take a look at price moves, spot gold downtick of about 0.4% coming in, and that is after earlier rising to around 2,592 levels, and that was that record high coming in for gold as well, Cheryl.
Alright, so that's a handover coming in from the US markets, the commodity markets. A lot has happened, and all thanks to the big event that we've been waiting for. Shreyanshi, a very good morning to you. If you look at the event, it's played out. You expected that FOMC meet outcome coming in, and 50 basis point rate cut is what Jerome Powell and the entire Federal Reserve has actually picked the sides on. But apart from that, there are a lot of other global cues one is watching for. One is a conference board leading index in the United States, along with the initial jobless claims. This data will be very important, along with home sales data. Also, if you look at the United Kingdom, there is an interest rate decision that is impending. That's a big one. Apart from that, later this week, mainly on Friday most likely, you will also have Japan coming out with its interest rate decisions. The other events to watch out for will be Federal Energy Regulatory Commission open meet as well. So these are the events to watch out for, and also we have to see what Bank of England also does, given the fact the FOMC has gone ahead with a big jumbo 50 basis point rate cut.
Well, absolutely, but let's kickstart our coverage this morning with the biggest talking point this morning. Then Federal Reserve kickstarts the much anticipated series of interest rate cuts with that supersized 50 basis points reduction. Central Bank Chairman Jerome Powell details the move, says it is meant to show policymakers commitment to sustaining a low unemployment rate. Now that inflation has eased, the reduction in fact has affirmed market expectations that recently shifted from an outlook for a cut half that size. Now remember, outside of the emergency rate cuts during the pandemic, the last time the FOMC cut by half a point was in 2008 during the global financial crisis, and the decision lowers the federal funds rate also to a range between 4.75 to 5%. Additionally, the committee has indicated via the dot plot that the possibility of another 50 basis points cut by the end of the year is something that they're penciling in as well. Let's go across and listen in to a slice of what Jerome Powell had to say then.
In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting.
All right. Meanwhile, the Federal Reserve Governor, Michelle Bowman, actually became the first Fed governor to vote against an interest rate decision by the U.S. Central Bank since 2005, denying Federal Chair Jerome Powell a clear consensus at the pivotal moment. The other 11 voting members all cast their ballots in support of reducing the policy rate by half a percentage point. Bowman, the Fed said, that preferred a quarter point rate cut. So Michelle was the only one who preferred a quarter point rate cut rather than everyone else who voted in favor of 50 basis points.
Alright, then moving on. Meanwhile, US Republican presidential candidate Donald Trump reacted to the Federal Reserve cut, calling it a big cut. Trump said, and I quote, to cut it by that much, assuming they're not just playing politics, the economy would be very bad. And that's the word coming in from Republican presidential candidate Donald Trump then.
All right, then keeping it with the central bank activity, we caught up with ET Now's consulting editor Swaminathan Iyer to understand if RBI will follow Fed's footstep in kickstarting the easing cycle. In an exclusive chat, he outlines his expectations on where Indian macros are headed as well.
Well, frankly, Mr. Shaktikant Das keeps worrying. I mean, if you ask me, he places far too much emphasis on what the Reserve Bank can or cannot do. If you ask me, monetary policy is more muddling towards a goal than any precision or fine-tuning, which is what Mr. Shaktikant Das seems to be aiming at. But as I said, broadly speaking, commodity prices come down. Oil particularly has come down. Some food prices have come down so that, the export of onions has been liberalized. So in these circumstances, I think Mr. Shaktikant Das will cut at least twice if the Fed cuts twice. I do not think the future is that predictable. There's a very good monsoon. The rains have been very good. So that is a reason for food prices to be under control. If food prices are under control, many other things come under control, because in India, studies show that food inflation leaks into the general inflation. Equally, a negative fall in prices will leak in. The world is having a relatively softening of commodity prices, but above all, of oil and gas. Some other commodities, not so much. In these circumstances, I think, inflation should not be rearing its head. I think the future prospects right now are actually quite decent. Again, if you have the uncertainty of the US economy or maybe a slowdown in anticipation of a trade war, all of that again would be anti-inflation. So I think that inflation is unlikely to rear its head in the next 3 to 6 months. The main challenges we are going to face is the fragmentation of the global economy. India is more globalized than even China in terms of trade to GDP. I don't think this is well understood. So while Mr. Modi and PLI all looks as though, everything is an internalized thing, the truth is India is a substantially globalized economy. If you further look at the global capability centers which have come up in India without any fanfare, are employing 1.5 million people, maybe 3 150, 200 billion of revenue. Huge amount of R&D going on out there, world class. So, you know, while there is the global aspect of this, I think, is more important. So the GC, I would say the global capability centers have been the most successful thing that have happened in 10 years of Modi. Modi will not talk about it because he did nothing to create it. It was created by globalization. The global shortage of skills meant that companies the world over came to India because India is one of the few places that produces maybe 3 million STEM graduates every single year. And to take advantage of this pool of skilled manpower, the world has come here. It is far, far bigger than PLI. Believe me, PLI is nothing compared to the global capability centers. So the globalized India remains globalized. On the services side, therefore, it looks as though we will continue to do well, including global capability centers and service exports. But on the goods exports and goods production, I think the coming trade wars and protectionism will hurt us regardless. The idea that we can just keep growing at 7% in the face of all these global problems, I think would be very optimistic. I would not be surprised to see a slowdown to 6.5 or even 6% average in the next 5 years.
All right, so you have the FOMC that's gone ahead and taken the bold move of a 50 basis point rate cut coming in. But let's hear what brokerages have to say actually. Macquarie has come out with a note on the rate cut beneficiaries, and what they are saying is, apart from the potential long in the NBFC space, they are saying they don't find any obvious Fed rate cut trade in India. They're saying that performance of banks have been mixed. 12-month post the first rate cut has actually been negative. No clear inference here as aspects like NPL cycles and liquidity conditions actually matter back home when you talk about the financial space in particular. They're saying the insurance companies don't have sufficient listing history to conclude that there will be a trade there on back of a Federal Reserve rate cut. They say NBFC should be potential beneficiaries due to the easing environment when you talk about the interest rates. They're saying that also, unlike 2001, 2007 and also 2019, this time IT spending has already been very constrained, and they're expecting the services demand to pick up in about 3 to 6 months after the first rate cut. So apart from the NBFC space, they don't see a clear trade when you talk about the FOMC rate cut beneficiaries, Shreyansi.
Well, absolutely. And let's get you some more news and updates then. And it's been a long-held promise of the government holding simultaneous polls. And now that promise is one step closer to becoming a reality then. And in a landmark move, the Union Cabinet yesterday cleared the proposal to hold simultaneous elections in the country as recommended by a high-level committee headed by former President Ramnath Kovind. Elections, according to yesterday's policy announcement, will be held in 2 phases. The first phase will be covering Lok Sabha elections and assembly elections, while the second phase is going to be covering local body elections within 100 days of the first phase as well. Government has invited feedback, as the report will also be going for consultation, and the bill is likely to be tabled in the winter session of the Parliament. In fact, let's get you some more detail on this. And my colleague Ankur Mishra is standing by with an explainer. Ankur?
Yes, before getting into details, let us understand what is one nation, one election in simple terms. Holding simultaneously Lok Sabha as well as the Vidhan Sabha elections will encounter for one nation, one election. Now, what is the key development which has happened? Of course, Cabinet has now cleared the proposal. There was a committee which was formed, an 8-member committee which was headed by former President Ramnath Kovind, and that had recommended the pros and cons of one nation, one election. Now, before that, let us understand what has been there in the history. Till 1967, there was a scenario where Lok Sabha election as well as Vidhan Sabha elections or state elections were held simultaneously. But what went wrong due to that? We are holding different elections for states as well as Lok Sabha. In 1959, the then CM of Kerala, there was a dissolution of state assembly, and after that a series of dissolutions happened. That happened in 1968, that happened in 1969, and the premature dissolution of state assemblies broke the cycle essentially of holding the elections of Lok Sabha as well as state assemblies, and then the elections were not held simultaneously. Remember, the idea of one nation, one election was suggested by the committee, and now the government is working on it. Now, with any kind of decision, there are pros, there are cons. Now, let's understand what are pros to this decision. As far as the pros are concerned, of course, this will reduce the cost. That is what the government is suggesting. This will also limit elections to a single election. Of course, this will save the energy for the nation. And apart from that, the frequent administrative disruptions, there is a model code of conduct which is implemented whenever there are elections, and hence decisions can't be taken by the government, and therefore this kind of one nation, one election will reduce that kind of problems which are faced by the incumbent governments. Now, as far as the cons are concerned, of course, there is one scenario that it could pose a logistical issue because it's a huge nation. Once you will conduct elections like this, there will be logistical problems. Apart from that, 2 times EVM, VVPAT machines will be needed while conducting this kind of election, and national issues likely to dominate over regional issues, because if Lok Sabha election as well as state assemblies are conducted together, of course, the national issue could be the scenario that will gain the dominance, and hence regional issues, regional parties may cry problems which they are facing. Apart from that, why we are pushing for this change? Now, if you talk about the history, in 1983, Election Commission suggested simultaneous elections. In 1999, Law Commission under Justice B.P. Jeevan Reddy reiterated that there should be one nation, one election, because over 30 years this problem was faced, and finally in 2015 the Parliamentary Committee suggested the same, and in 2018 Law Commission draft report did say that polls not feasible within the existing constitutional framework.
All right, thank you so much for that, Ankur, for putting all of that into context, telling us what's the significance of this such a move coming in and cabinet approval coming in for one nation, one poll. But on that note, we'll slip into a break on this edition of Market Cafe. When we come back, more stocks and news back home that you need to watch out for, so don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's get you a look at the Asian markets then. And Japan's Nikkei is the one that's leading gains when it comes to the Asian markets, as traders largely are assessing the Federal Reserve's decision to cut interest rates by a half percentage point. Uptick of 2.5% coming in on your screens for Nikkei. So quite a lot of strength that we're seeing for Nikkei. In lockstep with the Fed as well, the Hong Kong Monetary Authority cut its interest rate by 50 basis points to 5.25 as well. And this is as the city's currency is pegged to the greenback. Now, Hong Kong's Hang Seng Index flat with a negative bias is what that one is doing on your screen. So not all that much, but Shanghai is the one that is on the back foot. Let's take a look at Shanghai as well, because a downtick coming in for Shanghai, 6/10 of a downtick for Shanghai on your screens as well. South Korea's blue chip Kospi as well. Let's also take a look at that one. That is also under pressure, 0.9% downtick coming in for Kospi as well. And Australia's ASX 200 also a tad bit muted at this point, a slight tinge of red on your screen for that one as well. So a negative bias is what we're looking at when you take a look at ASX 200 as well. So largely a mixed handover. Investors in Asia, of course, also awaiting upcoming central bank decisions in the region. So you do have Bank of Japan that is poised to kick off a 2-day meeting ending Friday as well. Nifty, of course, shut shop around the 25,370 levels, and Wall Street closed lower. So currently a mixed handover for the Asian markets, and with all of that, we're currently penciling in a slight uptick at the open. But let's really see how that pans out for us, Cheryl.
Absolutely, but all eyes on what FOMC has done and how the markets will react to that back home. So we have a panel of guests actually lined up for you. We will be having on the top of the show at 8 a.m. We will be having global guests to decode what the FOMC rate cut means. Apart from that, at 9:20 a.m., catch Mark Matthews, who's the head of investment research at Julius Baer Bank, as well as post that we will be talking to the management of Nazara Tech exclusively on ET Now to understand the growth roadmap. Remember that a big corporate action has taken place in Nazara Tech, and we will be having the management live exclusively at 9:30 a.m. Apart from that, remember that you have the festive season upcoming. You have a gold demand most likely on the rise. You have gold imports that have risen. So we will be talking about the sentiment with Senco Gold Management. We'll have the MD and CEO joining us on the show at 9:40 a.m. And apart from that, we will also be having the management of SIAT, who will be joining us at 10 a.m. to talk about the industry trends and how's the trend looking like, at least in the tire industry. Apart from that, we have a big exclusive that is lined up for you all through the day. An exclusive interview coming in with Shyam Srinivasan, who will be talking about Federal Bank. He's been at the helm of Federal Bank for a while, so we will be talking about the rise of Federal Bank under his leadership, as well as the path going ahead for the company.
Alright, then lots of interesting conversations to keep track of, and that's a power-packed lineup for you right there. But with welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates. How will the new surrender value rule impact the insurance industry? Then let's decode that. My colleague Anurag Shah caught up with Manish Alag of Kotak Mahindra Life Insurance. To know more about this, then listen in to what he had to say.
It is a big change as far as concern of the product is concerned, but it's a good news for the industry in the long run and also for the customer in the long run. So it will force insurance companies to become even more cost efficient, design more innovative products. The one big change is, till now, in the first 3 years in traditional product, there was not much of surrender value. With this new change, even after first year, there will be surrender value. So it has pros and cons. It's a good change for customers who exit initially.
How much difference would be, if you can give me some ballpark figure, if somebody is surrendering in first 3 years, so in the previous rules and new rules, how much more money they will get?
In the previous rule, if somebody surrenders after 3 years, after paying 3 premiums, so normally customer used to get back about 30 to 35%. Okay, मान लीजिए 3 में से 1 प्रीमियम वापस मिल जाता था. As per the new rule, if somebody surrenders even after first year, of around 45-50% will be returned back to the customer.
After 3 years means around 80% will be.
It will be, the amount will be much higher.
Can I infer that in last 6 months there was no change, and in next 6 to 8 months there will be no change at the industry level in term pricing?
There will be marginal change in term pricing.
In upwards.
There will be marginal change.
That will be a single digit only.
Correct. There will be marginal change there.
Alright, moving on then, in a bid to bring some relief for the gig workers, the Labour Ministry officials met with the aggregator platforms. Sources have told ET Now that the likes of Amazon, Zomato as well as Uber were present for the meeting. They discussed things like E-Shram Portal and also extending several benefits to the gig workers. Aishwarya is here with the report.
Well, good news coming in for the gig workforce in India. Minister Mansukh Mandviya, along with Secretary Sumita Davra, conducted a meeting earlier with a dozen platform aggregators as well as consultants, is what we're learning from our sources. The likes of Amazon, Flipkart, Equal Cargo, Zomato as well as Blinkit, Uber, Urban Companies, Swiggy and Instamart, E-Commerce Express, Ola, Porter, as well as Blue Smarts, and a bunch of other consultants from Deloitte were part of this particular meeting. And what they discussed was, of course, the onboarding of the gig workers to the E-Shram Portal, which was on the priority list of the discussions that went through this afternoon. Now, what they also discussed is that social security benefits for the gig workers will be easier in case of all of them being onboarded onto the E-Shram Portal, and the benefits such as healthcare, accidental insurance, women's safety, as we also have women gig workers in the fray, that is being considered, and also better working conditions. Every other day we hear of Zomato and Swiggy delivery people, in fact the workforce, facing a lot of issues, especially during the rains as well. Now steps will be taken towards the welfare of gig workers. Once they are onboarded to the E-Shram Portal, they can also take benefit of the central as well as state schemes. Now, Social Security's Code 2020, which was devised earlier, has not yet been implemented. And with this particular meeting, they're also deliberating these particular schemes of the Social Security Code 2020 to be implemented as well. And this will help assess the size of the Social Security Fund. Apart from that, what we're also learning is that the ministry is deliberating contributions to be taken from the platform aggregators, about 1 to 2% of their turnover, which they might take as a contribution from these companies, and will be utilized for the welfare of the gig workforce. And this is what we're learning and picking up from our sources as of now, what went through in the Labour Ministry and platform aggregators meeting through the day.
Thanks, Ashwarya, for that update coming in. So some relief for gig workers may be in store, but moving on, then the cabinet announced some key decisions, which includes the One Nation, One Election policy that we told you about earlier, fertilizer subsidy and approval for Chandrayaan 4 as well. So big boost coming in for ISRO there as well. Irina Sumit Chaturvedi is standing by with an update on what really all of these decisions were and what really is the list when it comes to this. Sumit?
Apart from that, many other steps were taken. The prominent ones among them include the establishment of NGLV, Next Generation Level Vehicle of Space. Well, that's going to have larger payload capacity, and India will have a station inside the space, and that's what the plan overall is. There is overall over 70,000 crore money approved for tribal communities, 24,000 crore for nutrient-based subsidies for fertilizer for Rabi season, and certain other schemes that have been approved by cabinet today. But the prominent one was this the One Nation, One Poll scheme, which has been approved by cabinet, which has been called as a big step by the current NDA government that will lead to a lot of saving as far as effort and money for elections is concerned.
All right, moving on then, Finance Minister launched the NPS Vatsalya Scheme. She also unveiled an online platform for subscribing to NPS Vatsalya. The scheme was introduced in the union budget this year, and it allows parents to invest in a pension account to secure finances for their children. As per the scheme, this account will turn into a normal NPS account once the child turns 18. Also remember that the government has increased the limit on the employer's contribution to the National Pension Scheme to 14% from 10%. So let's hear out exactly what the Finance Minister had to say.
We are standing out as an economy which is growing at the fastest rate in the last few years, this year, and the next few years also, for which you can do prediction. So if that is the kind of growth with which we are leading ourselves, we also need to plan so that there is intergenerational equity.
That's the word coming in from the Finance Minister, but let's get you some more interesting conversations then. And on the sidelines of the Renewable Energy Summit, Prakash Priyadarshi caught up with the Mines and Renewable Energy Secretary B.S. Bhalla to talk about the government's capex plans for the sector. Now, he remains confident of new capacity addition as well as the financial sector's ability to meet the funding needs as well. Listen into what he had to say about all of this.
We have been talking about a number of about 30 lakh crore in general for the RE sector development till 2030. And therefore, and 30%, let's say the normal debt equity ratio, you would need about 30% of that as debt, as equity. 70% of the 30 lakh crore is for 22 lakh crore is what is needed in debt financing. Not necessarily only from the banks, could be money market, could be other kind of debt, but that's the kind of a number. So as against our estimate of debt requirement of about 22 lakh crore, we have the banks and the financial institutions offering to lend or committing to lend an extent of about 30 lakh crore.
And the pace at which renewable energy projects are being developed, I think evacuation will be a challenge going forward. So any strategy in place, especially for such projects which is being developed in a difficult terrain like Ladakh or somewhere else.
We have already when we about a year and a half ago, if you recall, we came out with a transmission plan for 2030. In fact, we've already designed and come out with a specific plan for adding transmission capacity by 2030. More than 500 gigawatt capacity. So taking, I think it was 537 gigawatt, if I remember correctly, is the transmission capacity already planned. But what happens is that's something, so we are proceeding as per that target, as per the plan which has been made. And this plan was made in consultation with industry, it was made in consultation with the states, and of course the transmission players. So therefore, that plan is on track.
All right, on that note, we'll slip into a break on this edition of Market Cafe. When we come back, we'll tell you all the stocks that will be in focus today, so don't go anywhere. Welcome back. You're watching Market Cafe on ET Now, and as promised, we have Ria standing by to tell us all the stocks that are in focus and that will be actually moving based on news flow. A very good morning to you, Ria. So which are the stocks that are on your radar today?
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. First up, we have Oriental Trimex, for which the rights issue opens today until the 27th of September. And the total issue size for this is rupees 48.51 crores and the issue price is rupees 11 per share. So we're definitely watching out for Oriental Trimex. We also have Prithika Engineering in focus, which is going to purchase an 87,000 square feet land for the expansion in Hoshiarpur. And this land purchase is likely to be completed by the end of October 2024. We also have IREDA in focus today, since they have received the approval for the alternative mechanism for raising of funds through the QIP route up to an extent of 7% of the paid up equity. Let's shift focus though to Nazara Technologies, which has approved a preferential issue for the issuance of up to 94.31 lakh equity shares at an issue price of rupees 954.27 which aggregates to an amount not exceeding rupees 900 crores. Now, the investors for this issue are likely to be SBI Innovative Opportunities Fund, Think India Opportunities Master Fund, and also Siddharth Sacheti and Mithun Sacheti, among other investors. Now, on Nazara Technologies, they have also acquired an additional 19.35% of Absolute Sports Private Limited for rupees 145.47 crores, and they have increased their stake in this company to 91%. We also have Century Textiles in focus today, since the Ministry of Corporate Affairs has approved the change of their name from Century Textiles and Industries Limited to Aditya Birla Real Estate Limited. And in fact, Garden Reach Shipbuilders and Engineers is also in focus, since they have received an order for the construction and delivery of an additional 4 multi-purpose vehicles for an additional consideration worth $54 million. Lastly, we are also keeping an eye out on Aurobindo Pharma, which has entered into a binding agreement with GLS Pharma Limited and its promoters for the acquisition of the balance 5.9 lakh equity shares, which is 49% of GLS, for a total purchase consideration of rupees 22.5 crores. So we're definitely keeping an eye out on all of these stocks today.
Well, absolutely, definitely keeping an eye on all of those stocks. There you have it. That's a list of stocks that are in focus on back of news flow. But let's also get to the list of counters that are in focus, because they make it to brokerage radar this morning, and Gaurav is standing by with that update. Gaurav?
Well, yes, let's begin with Excite, because Citi has now maintained buy rating but cut the target price for the company to 560 rupees. What they say is that there is sluggishness in the auto OEM volumes, and that is the reason why we may see some sluggishness in the revenue growth as well for Excite. But at the same time, they also believe that the company is expected to benefit from the replacement demand. So the vehicles which were sold in FY22 and 23 will hit its first battery replacement cycle in FY25, and that is the reason why they have maintained buy rating on Excite. Up next, we have is Tata Motors, where MK has actually upgraded the rating to buy while maintaining the target price to 1175 rupees. What they say is that profitability and deleveraging strategies are still underway for the company. Demand for CV is actually improving. When we talk about passenger vehicles, they say that the Tata Motors is actually at a relatively better place if we compare it with the peers. And when we talk about valuations also, they find some comfort in valuation given that the stock has fallen recently, and that is the reason why they have actually upgraded the rating to buy. Other than that, let's also focus on Brainbees solution, because we have got two brokerages actually initiating. So first we have is Morgan Stanley, who initiated with overweight rating and a target price of 818 rupees. What they say is that Brainbees is actually well placed and well capitalized when we talk about India's growing childcare business through their brand First Cry. And apart from that, we also have BofA, who initiated with buy rating and a target price of 770 rupees. Because what they also say is that First Cry is a niche player, and at the same time it also has some growth levers when we talk about profitability. So definitely watching out on all these counters on the back of the brokerage note that we have received today.
Thank you so much for that, Gaurav, for outlining all the stocks and focus on back of brokerages. But that's not all. We also have P&G India as well as Gillette India that will be in focus. Ria, why will both of them be in focus in trade today?
Yes, so yesterday both P&G India and Gillette India held their analyst meets, and for P&G, the CFO Mrinalini Srinivasan highlighted that rural demand is expected to keep up, though they do anticipate some short-term challenges to persist. Now, since P&G is the market leader in the feminine care category with half of the market share, and the feminine care market actually stands at 3,400 crores, they are expecting double-digit growth over the next 3 years, and they have also received some initial feedback for the new product launches, which has been very positive. In fact, for the premium category, they have done some innovation and operational productivity, which has led to margin improvement in FY24. In terms of volume growth for the FMCG segment, that is expected to be in the mid-single digit for FY25. And if you talk about the feminine and healthcare segment split, the growth has been balanced across both segments, and they have grown distribution by 1.5 times in the feminine hygiene market over the last couple of years. They've also said that they are developing some in-house AI and ML models for better efficiencies going forward, and they are seeing some green shoots in rural consumption coming in. And on quick commerce, they have commented saying that since quick commerce is experiencing a lot of rapid growth, they have also invested in R&D to understand the quick commerce consumer behavior. Now let's also quickly take a look at Gillette, for which the CFO Gautam Kamath highlighted that they are also, since they are seeing lower inflation and a strong monsoon, that is going to augur well for rural consumption going forward. And the rising unemployment and declining rural wages would also be the key factors to watch out for. Now, the grooming category stands at rupees 3,300 crores, which is growing at a mid-single-digit pace. And the shifting trend towards men having more beards actually presents big opportunities for new solutions for Gillette. And since the focus has been on in-home hair removal, razors have seen the fastest growth. Now, in this segment, the performance of Venus has actually doubled over the last 5 years and is growing at a double-digit pace. They've also said that structural margins have improved in FY24, driven by cost productivity and product innovation.
All right, thanks Ria for that update coming in. So those were the key takeaways when it comes to that analyst meet. But with that, we're completely out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Cheryl D'Souza, as well as the entire team that put the show together. Thank you so much for tuning in. You don't go anywhere, because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.